Hello and welcome to your weekly GoNoGo Show here on May 30th, Thursday, 2024. My name is Tyler Wood. I am a CMT charter holder, and as always, I am joined by the illustrious Alex Cole. How you doing, my friend?
Very well.
Fantastic. Let's start, as we always do each week, taking a look at the cross-asset heat map, get a sense of the context of the environment we are investing in. Take us from the top down here, Alex.
Absolutely. So we know we're in a go trend for equities, but we've seen quite a bit of weakness this week. You can see that we've had a succession of paler aqua bars. That's, of course, the go trend indicator showing us that there's been some weakening to the go trend that we've been in now for several weeks. Treasury bond prices that entered a go trend a week ago have now showing some uncertainty. As you can see, we're seeing some go fish bars there, those amber bars showing that there's a bit of market uncertainty in terms of which way the trend will decide to go for Treasury bond prices. The commodities market is interesting because we saw so much uncertainty, so much chop with commodities, but they seem to have now come back into a go trend, albeit painting weaker aqua bars. Of course, that's the USCI, the US Commodity Index. And then the dollar in the lower panel had a few moments where we thought perhaps things would change, but at the moment still hanging on to its go trend as well.
Fantastic. Now, in our top-down approach, we want to start at the asset class level because those intermarket relationships are so important. And whether or not you are an equities-only trader or you just trade Forex, I think paying attention to the other markets that are out there is really a necessary part of the analytical aspects. So let's move into the full go-no-go chart for some of this price action. Let's start with the 10-year Treasury yield, the TNX. Just to get a sense of that pullback to neutrality, how deep the correction has been, and whether or not we can look for signs of trend continuation.
Yeah, and you can see here that one of the most encouraging things, if you are somebody that is expecting the go trend to resume, is that we clearly broke back above the zero line here on the go-no-go oscillator. So that tells us that when this short-lived no-go was in place, momentum didn't really confirm. We rode the zero line. We saw the beginnings of a squeeze, which tells us there was a bit of a tug of war here as prices were sort of stopping moving lower and starting to move sideways. And then as we saw this amber uncertainty, we've seen go-no-go oscillator break back into positive territory. We're now at a value of 3. So there's some positive momentum here for higher rates. So we'll see if that will in fact lead to a resumption of the go trend or what will happen going forward. But definitely some positive momentum as we're seeing uncertainty in the trend.
And today, price action on those rates pulling back. Interesting to note that very tight correlation as rates are rising, equity markets are contracting, and so that inverse correlation still holding up really well. We'll be looking to see signs of trend change depending on how this week concludes. Right now, we're recording midday on Thursday, May 30th. But Alex, let's move on from rates. Let's take a look at the US dollar.
So we were talking about this just now in that map. You could see the sort of uncertainty, a little bit of chop as go-no-go trend struggled to stay in a go trend, but it seems to have found some support here at the levels that were this prior high. So we've got also the support coming from this gap higher, and now we see that we seem to have found a bit of support and set a low, which we're now rallying from. So we'll need to get above this level to set a new higher high. At the moment, still moving on weak go bars and the oscillator riding the zero line. You can see this go-no-go squeeze building close to its max now. So that's telling us that, really it's a representation of the reduced volatility that we see in the price chart. So as investors make up their mind in terms of which way this will go, we see the oscillator riding the zero line, and it'll be very important to note in which direction this is resolved.
Absolutely. And let's get back to a map view. I want to see all of the commodities relative to equity markets. And building these relative strength heat maps is a helpful way to just see, not on just absolute terms, but also on relative terms, how the commodity space is performing relative to equity markets. Here we have a variety of baskets of commodities against the benchmark S&P 500. And so if we look from the top to the bottom of this heat map, we can see diversified agricultural commodities, energy and oil, gas, nat gas. We can see industrial metals and precious metals. And it's a real mixed bag, if I'm reading this correctly, Alex.
Well, it's interesting because it's actually the outperformance from the commodity space is coming from metals. The top panel here is copper, just entered an amber bar here, but has been obviously in a relative go trend. Then we're seeing in this panel, we're seeing base metals. We're seeing the gold miners here, so some success coming from some gold mining companies. Silver down here is the next one that's outperforming. And so really it's base metals, precious metals, and the lone sort of, outcast in that group is natural gas that is in a relative go trend as well. But really the outperforming commodities at the moment are the metals.
Fascinating to see that change. Natural gas right up until the start of May in a relative underperformance against all the equity markets and kind of the lone holdout while most of the rest of the commodity space was leading. Now we're seeing that reversal. So Alex, let's move away from this heat map. Let's pull up a chart of copper first. Take a look at how the industrial metal is doing on an absolute basis, and then we'll look at that relative to the S&P 500.
Yeah, so it's been a great performer for many people's portfolios for several months now. You can see that we've been setting higher highs, higher lows, and what we like to check out is how the oscillator has been holding up during that time. And you can see that throughout the duration of this go trend, oscillator has held at the zero line, finding support there each time, and each time it bounces back into positive territory. We can say we're seeing signs of continuation, and these would therefore be relatively low risk opportunities to get into that move. These are the green circles. Well, look where we are now again. After the most recent high, we had a counter trend correction arrow that told us price may struggle to go higher in the short term. You can see the go-no-go trend then painted a string of weaker bars showing that weakness. And now we've fallen right into this sort of congestion area where we were at the beginning of the month. And you can see that this could provide some support. It'll be interesting to see what happens as price stays at these levels. And if we look at the oscillator again, oscillator riding the zero line, we see the squeeze building one more time. So will we have the same setup? Will we have the same situation? Will the oscillator continue to find support at zero? If it does, bounces back into positive territory, we'll look for price to try to move higher, seeing if it can take out this prior high. If we break below the zero line, obviously this weakness that we're seeing in the trend will be followed by some possibility of trend correction or trend change, or even some amber bars first, but definitely would be a worry if the zero line didn't hold this time.
You know, a chart like this is such a fascinating example of that debate between fully systematic and fully discretionary trading. So the icons are calculated in a mechanical fashion. They don't change. What we're looking at in those counter trend correction arrows is using momentum in its traditional sense, seeing it reach that overbought level and then wane or cool off from overbought levels. So those earlier three in April, we saw momentum vacillating between overbought and relatively high, still positive threes and fours. That's still going to trigger the counter trend correction, but much shallower troughs in the momentum ranking. This recent one, we saw momentum plummet from overbought extreme directly to zero, to neutral. So a little different context. And I think one of the things we talk about on this show every single week, Alex, is the importance of data visualization and having the context rather than trusting everything to a black box. We wanted to put these algorithms in a form of data visualization so that you can see the whole picture clearly. I also note as that squeeze is building, look at the formation of those bars or candles, if that's what you're using on your chart. We're closing at the open every single day. And what a tug of war that's happening between buyers and sellers for copper right here.
Absolutely.
That's fantastic. All right, moving on from copper, let's take a look at the chart of gold.
Yeah, gold's been very interesting because we've talked about it ad nauseum, also almost at length, in terms of the decade-plus long cup and handle that was broken finally last month. And you can see, actually 2 months ago, I think in March, we finally made that monthly higher close. But now we're well above those levels. Anything up at these levels now is well above that breakout level that we were watching for so long. But on the daily chart, we can see that we sort of topped out. This is like a double top here. Very similar price as the high before. Now, for it to complete, we would need price to break below this low for that to be a double top in completion. But we're seeing a fall away from that high price. So definitely there's a lot of sellers up here at this level. And then we're going to watch to see what happens as we ride the zero line. Now, this time, the zero line is holding, but GoNoGo trend has been unable to continue to paint Go colors. So we're seeing a lot of uncertainty now at these levels. Will this be support? Will we go back and try to make another attack at these highs? Or will we change trend and perhaps threaten the low from earlier in May?
Alex, you just made such an important point to traditional technical analysts everywhere. I see so many folks pointing out head and shoulders tops or head and shoulders bottoms, inverse head and shoulders, and they're not waiting for the completion of the pattern. Obviously, we could see that price came back to the same point for a second high and met with resistance. But you just said it's not complete until we break that prior low, and it's not a double top formation, sending us a lot lower until that formation is complete. And so a word to those out there who are watching TikTok traders or folks without a CMT after their name, perhaps there's a little less attention being paid to how the great masters articulated the very specific rules to those patterns.
Well, I think one thing to say, Tyler, is just to make that point even more perhaps clear is just to ask a question of everybody: what should happen at that horizontal line if we approach it? Until anything different happens, we know that should be support. So we aren't, a double top is a reversal pattern, right? And a double top is telling us that we should expect prices to fall the same amount as from the top of the highs to the neckline. But that's only if that neckline is broken. If the neckline is not broken, then it should be support, right? We know that it's been support before. So until it isn't support, it is an area of support where we've had buyers come in previously. So yeah, completion of patterns. I don't know if that's the most sort of incorrect application of technicals that we see when teaching.
There's so many examples. It's hard.
Yeah, I guess. But you know, people saying, "Oh, it's a double top," or "Oh, it's a head and shoulders." Well, it's setting up perhaps to be a double top, but until that neckline is broken, it isn't. Yeah, great point. Well made.
Absolutely. All right, moving on from our precious metals, let's take a look at the oil and gas market. USO, the ticker symbol we like to use just as a representation. On those oil prices, we're in a no-go, but it's weakening.
Yeah, USO. So obviously, like I mentioned in that Relmap, the outperformance coming from the metals. USO oil not being a metal, of course, we're seeing it in a no-go. So relative underperformance. We were sort of interested the last couple of days as we sort of approached an attempt to make new highs, kind of fell away again. So really moving sideways at this point. We do see some oscillator divergence as we made some slightly lower lows in the price, oscillator coming back towards the zero line. But you can see how oscillator is struggling to get away from the zero line in either direction. So we'll want to see what happens here. If we use this zero now as support, we may well see price rally and set a new higher high. If it gets back below the zero line, then all's well in the world of the no-go, right? We're painting no-go bars, oscillator in negative territory. That would tell us that momentum is confirming the no-go that's in place at the moment.
Fantastic. All right, let's turn our eyes back to the equity markets. Let's start with just some top-level indices. Starting with the S&P 500, let's take a look at that price action on a complete GoNoGo chart, see what we're dealing with on the GoNoGo oscillator in the lower panel. And that interplay between trend and momentum is so critical to our ability to be quantifiable and objective in our approach to buyable dips. So we're setting up for decision point here, Alex. Talk to us about what we're seeing on this chart.
Yeah, I mean, it's really the crux of how people capitalize as trend followers, in that, you know, we know that price doesn't move in a straight line. So the important part is what happens when we do see these pullbacks. And as long as the oscillator holds at zero, we know that the trend is healthy. And that's sort of the key point of understanding how we interpret the interaction between trend and momentum, in our case, the GoNoGo trend indicator and the GoNoGo oscillator. So once we were unable to find support at 0 here, you can see how that led to a deeper correction that turned into a short no-go. But the no-go then was unable to be supported by the oscillator finding rejection now at the 0 line, and it broke out of a max squeeze back into positive territory. So, okay, now we know the Go trend can begin again. Where we're looking at right now is that we are right at this area of prior high. And we know, Tyler, we've looked at the charts of all of the, every time a high is made and we come back to it, so many times that can be an area of support. So when we know that, we're looking at that kind of context, and we then look towards the oscillator, which is now riding the 0 line. If we can find support here, that would be a very healthy sign. We've had a nice strong move. We've fallen away after these counter trend correction arrows, and then that would be an opportunity perhaps to buy the dip early in a relatively new Go trend. So we're going to watch the oscillator closely here. If it finds support, gets into positive territory, we'll see a trend continuation icon under price, and we'll know that it's a relatively safe opportunity.
Absolutely, it's waiting for that momentum signal. When momentum finds support at the 0 line, that's often a leading indicator of trend conditions. And the breakout and retest, what a classic example of human behavior, right? A little bit of uncertainty as we establish that or reestablish that Go trend, and pushing to all-time highs again last week. And here we had that big engulfing pattern on Friday. Huge down candle, and a little bit of follow through this week, uncertainty, but we'll be waiting to see how the market closes here for the week ahead.
Yep.
Alex, as we often do, we get under the hood, but just before we do that, let's pull up the Russell, the IWM ETF, just to take a closer look at how that trend has been performing as well.
Yeah, IWM has been a little different. It hasn't been racing higher as has the larger cap S&P 500. So you can see that we actually did not get to new highs over the last couple of weeks. And we've even seen an amber go fish bar come in yesterday. So small cap not performing quite as well as the large cap when we look at the IWM. But again, we are now today rallying and back in a weak Go trend and the oscillator at 0. So again, will the oscillator find support? If it does, that would be a healthy sign. Perhaps we then see IWM catch up with the S&P.
And could you bounce this out to a weekly chart as well? We know multiple time frame analysis is so important. Great books like those by Brian Shannon that have really helped a lot of investors understand this idea of fractal nature of markets. On a weekly chart, and we can even just kind of zoom in, that breakout is still in a strong Go trend condition on a weekly basis, even though we've seen a little bit of a pullback on the daily. So using our multiple time frames to our advantage, we can trade in the direction of the underlying more primary trend or longer term trend, just as Charles Dow taught us to. All right. Now we can switch gears, get under the hood of the indices. Let's start taking a look at the sector groups of the S&P 500 relative to the benchmark. We're just using those simple ratios, and we'll print this into a heat map. If you watched last week's show, you'll know that we're holding consistent in this very odd barbell, where information technology and utilities are simultaneously leading the markets in this weaker Go trend for the S&P 500. Not super common to have one of the most characteristically defensive sectors of the market paired with perhaps the most offensive sector of the market. But that is the world that we are trading in, and I think all of the rotation that we have seen in 2024, we're seeing even more of it, and the market's trying to decide where we're going to find leadership. So, Alex, the areas that have rolled over, the cyclical sectors, on a relative basis, that doesn't mean that they're in downtrends. They are just not accelerating in the same way or same speed that the broader market index is. So they're not in an absolute no-go or trending lower, but they are not trending as high as quickly as the benchmark. Something important to keep in mind with all of your relative strength work, if the market's going down and you've got a relative outperformer, It doesn't mean that it's a gainer on absolute terms. But from here, from this heat map, our next step is to drill into the sectors themselves and take a look at the industry groups within those sectors that are leading the sector performance. So why don't we start with the information technology sector and take a look at this very similar construction that we saw last week in terms of the leadership from renewable energy equipment, semiconductors, computer hardware, and it looks like we're dabbling with a little outperformance from is it the software sector?
I think this is hold on, before we make a big gaffe. Electronic equipment has been in a go trend for a long time, so that's interesting that we're seeing some amber bars there. And you just saw it change again, so not doing quite as well as the other sectors that have been leading.
And a quick comment on that, while we are looking at daily charts and we're recording the show midday, all of those colors and conditions are live, and they will update in real time depending on the trading activity of the day. Once the day is closed, the colors do not reprint or change after the fact. Same thing when we're looking at weekly charts. That weekly bar is still active and in play throughout the entire trading week. So quick note on how those are constructed. Alex, let's jump out of this heat map. I've seen a lot of really hilarious memes about NVIDIA versus the rest of the world. NVIDIA carrying the entire market. NVIDIA being the only thing that investors can take solace in. Let's take a look at the absolute price action for NVIDIA and this recent breakout.
Yeah, I mean, we talked about this in some notes that we put out over the last several weeks, how once the oscillator broke out of that squeeze back into positive territory, and then there was follow through with the go trend, we flagged that as then possibly setting up to break to new highs. And of course, the go trend strengthened, and we've gapped now twice, much higher. So really strong chart for NVIDIA.
Absolutely, and at an overbought extreme from the GoNoGo oscillator on heavy volume, couldn't be stronger. Let's get back to the heat maps, and we're going to look at the utilities sector and the industry groups within the utilities sector that are outperforming. And if I remember correctly, we're down to just a single leader, which is electricity companies.
Yeah.
Correct?
Yeah,
That's been our consistent leader over the whole entire spring, last several months. So why don't we look at a couple of companies, electricity utilities companies that have been trending higher. First one I want you to pull up is VST, Vistra Energy Corporation. It's just a conventional electricity utility, but my goodness.
Yeah, this is almost a silly chart. Really strong. Now, what would have been exciting for investors would have been when we were getting close to the zero line again, and that turnaround didn't even get to zero, but that turnaround then predicted a fresh breakout this week. So we've broken higher again. Monday of this week was that nice strong bar, so new highs. I mean, barely a low there, really. That's a move higher and then sideways. That's more of a pennant, sort of with a horizontal upper bound rather than any kind of flag. So interesting there to see how we didn't even really give back much from this counter trend correction hour before then, moving higher for Vistra.
Absolutely. And the next one to pull up would be NRG Corporation.
Yeah, NRG, a little bit more movement, a little bit more sort of volatility in the price action, but you can see the same principles apply. We're in a go trend. We come down to test the zero line. You can see that max squeeze build. Then we're all watching for that breakout of the squeeze. We see it into positive territory, and then of course volume picking up here as price moves higher, and then again now fresh price movement higher as the oscillator finds support at zero again. You know, Tyler, I love to talk about clustering of continuation icons.
Yes.
And so this is, we're setting up now for a third one. If we're able to get off the zero line back into positive territory, that will be a third go trend continuation icon. Like to see that on the right side of some price action. So if you consider this to be sideways movements after a volatile climb, then towards the right half of this, you're going to see three go trend continuation icons. If that's indeed what happens, that would be some nice support, and then we'll see price potentially setting up to try to make another higher high.
Fantastic. And just to show that not all industry groups, not every company within the industry group are working the same way, let's pull up PCG. That's PG&E Corporation. Not a runaway breakout trend, much more chop and some pullbacks here. But right now, testing the zero line for support, currently showing a pretty strong up day for this Thursday, May 30th. We'll see how we're doing at month end tomorrow. But Alex, talk to us a little bit about this chart.
Yeah, I mean, it's one of those where you sort of say, I wonder why such a big company in the same space hasn't had such an amazing run that the others have. And is there something fundamentally wrong? Will we see the oscillator break below zero, in which case this new go might come to an end? Or will it catch up with some of these other securities in its industry group and start to really take off? And we'll know by whether or not the oscillator can find support at zero and get back into positive territory. If it does, then we can say that momentum is resurgent in the direction of the underlying go trend, and we'll look for new highs for PC and PG&E and see if it does indeed catch up with some of the other runaway electricity companies.
Fantastic. And to close out today's show, let's take a look at the last and final, the emerging asset class of cryptocurrencies. Let's pull up a chart of Bitcoin. And obviously, we're seeing such strength and leadership from the semiconductor space, still constant chatter about the AI revolution. But when it comes to computing power and mining, distributed ledger technology has certainly been a part of that trend for a very long time. Talk to us about price action on Bitcoin itself.
Yeah, it just Bitcoin. We love the way Bitcoin trades. You know, Bitcoin trades very technically, and we've had this really great go trend. We saw it stall. We saw the oscillator break below zero. We saw it roll out of the go colors, painting some uncertainty, and then no go. This no go wasn't very damaging, but the oscillator did stay below zero, at or below zero during that whole period. So we knew it wasn't really safe to get excited about Bitcoin as long as the oscillator was confirming this no-go coloring of the price chart. And then we see the amber go fish bars, we see the oscillator break back above zero, and now we're in a go trend. So I'm loving this because we are in a go trend close to these prior highs. So if we can get any kind of enthusiasm, if we can get the oscillator bouncing back into positive territory, we'll get another trend continuation icon and we'll be attacking prior highs. So this is a fresh go trend. You know, I remember when Bitcoin hit 18,000, people were like, well, you've missed it. Well, we're at 70,000-ish, and if we can get some support here and a new trend continuation icon, there's no reason to assume we can't make new higher highs, which would take us quickly above 75,000.
You know, Alex, you touch on a really important point of human perception, right? So even just in this recent pullback, I think a lot of speculators have trouble noticing that it moved from 65,000 to 55,000, right? $10,000 loss on the per coin price of Bitcoin. That's just way too volatile. But it would be the same thing if a $6.50 stock moved to $5.50, right? In percentage terms, technical analysis can help us gain some context, particularly using logarithmic charts on these longer term basis. You can see that those percentage moves are perhaps less volatile than you might think. And I know the financial news media does a very good job of writing sensational headlines whenever possible. But this all looks like a very long flag or pennant, kind of a consolidation and accumulation phase before trend continuation or reversal. But we'll be watching that zero line for a quantifiable place to get involved. Alex, as always, love looking at charts with you, talking through markets. And for everybody who is a subscriber to the GoNoGo channel here on YouTube, thanks so much for checking these out. Feel free to share it with colleagues, clients, friends. And if you have any questions for Alex or I, feel free to shoot us a note, info@GoNoGoCharts.com. Be happy to hear how you're using it, what markets you're trading, what's your time frame, what you'd like to see on the show. If you've got ticker requests, send those in as well, and happy to talk about them. So until next time, take care of each other and trade them well.